Hello and welcome to the 101st Mortgage Bankers Association Annual Convention in beautiful Las Vegas. And I'm beautiful Phil Hall, and with me is beautiful Brian Coester.
Thank you, Phil. How are you?
Okay, Brian is, of course, with CoesterVMS. And Brian, what's new, different, and exciting with your company?
Well, we just came out with a new release. One of our integrations that we have is now with the Mercury Alamode MVP network, which is it's a good company. A lot of lenders are on it, and it's going to help lenders, manage appraisals and manage the compliance aspect of ordering appraisals. It's been good. It's been good. So we have a good release, and got a lot of stuff coming in 2014 and 15 as well.
Well, speaking of 2015, where do you see the industry heading in the new year?
So I think 2000. If you look at the past couple of years, 2013 was about all these new regulations coming out. 2014 is going to be about enforcement, which it really has been, with a lot of CFPB fines and some bank regulations that have really hit home. And then 2015 is going to be probably the year of automation. That's where the cost of compliance needs to come down, profitability needs to get back up, margins where they need to get back where they were. And a lot of that's going to come through automation, integrations. I think 2015 is where mortgage technology gets very, very serious.
Why is it taking so long for the industry to be serious about automating, especially integrating its automation?
Well, one of the things is people, have from other industries have a hard time understanding how complex the mortgage industry is. So when you look at let's say a similar size industry like the car industry, you're dealing with a very enclosed environment. There's only 100 or so factors that go into a car, and so they can automate a lot of the functionalities. Well, in the mortgage industry, you're really dealing with tens of thousands of factors. So you have, at the highest level, the loan application, all that stuff, and then at the lowest level, the actual city and town to close that loan and all the regulations associated with that, and then the secondary market. And so it's very complicated. Typically, the mortgage industry is about 10 years behind current technology, where things like XML that we're just getting, things like MISMO and third-party services that we're just getting, people are just talking about, those are really like 1995 technology. And then one of the reasons is because it's so complicated, that you're dealing with a database of 20,000 fields, whereas, in let's say something as simple as Facebook might be dealing with a database of, let's say, 50 fields. So integrating 50 fields versus 20,000 is significant. The mortgage industry has done a lot of great things to help, and what you're starting to see is that, okay, we have it all digital. We have it all in XML. We have it, so then that opens up the whole thing of APIs and integrations and web services that before, it was almost a foreign language just 5 or 6 years ago.
I heard somebody say that one of the problems that why the industry's been so slow to adapt to new technology and to integrate existing technology is being risk averse.
Yeah, and I think that's somewhat of a generational gap. A lot of times people think, if you have the paper, if you're able to look at the files, it's less risky than if you automate it. That's true initially. Initially, automation is speeding up. If you're going in the wrong direction, automating will speed that up. And then what happens is once you're able to put the controls in place, it becomes where you have a much safer environment. A great example is the automation of appraisals. Initially, you have this situation where, manually reviewing every single appraisal. And then it goes into, we'll have like a little checklist that'll automatically go through. And initially it's dangerous because it gets passed and then there's something wrong. But then what happens is you start managing those exceptions, and over a period of just a couple months, you were able to get a really good system that's able to account for all the variables that would manually review and get a pre-finished product. And a lot of the risk aversion is coming from just not understanding the full scope of the technology, which is new, which every industry has gone through that. So every, from the printing industry to the car industry to the manufacturing, every industry goes through that kind of push-pull. And I think the mortgage industry is now finally coming and saying, okay, we've got to go tech. We got to get our margins back. We've got to start making some money again. And rates are low. Everything's going online. Borrowers are shopping a lot more before they were able to, and we've got to automate this.
I just want to change topics for a quick second. Prior to going on camera, you had said that you've been hearing a lot of good news from the builders that you work with about what they're looking for in the industry in 2015.
Yeah, builders are doing well, and you should see that continue to 2015. 2012, 11, even to a certain extent 10. A lot of the bigger builders were buying land. They were buying massive tracts of land. They were holding it, and now they're starting to develop it. And our builder clients are busier than they probably have been in 4 or 5 years of us working with them. And it's good business. Some of it's spec, some of it's custom, but it's good business. It's that mid-tier, not the super high-end, not the super low, but that mid-tier. A lot of it is what they call urban areas, where there's an urban, where it's planned city developments, where they have urban mixed use, commercial. They're doing a lot of those, and it looks like it's going to be a good year. Nationally, the housing bubble, the housing market has not recovered nationally, but if you look at it in pockets, it's showing really healthy signs to where in another 2 years you'll start seeing some very, very healthy markets again. And you're already starting to see that, but you see it to the point of a recovery.
Well, I hope to see you again when the next show, which is going to be down in your area, Washington, D.C.
Absolutely. We'll be excited to go.
Excellent. Phil Hall, Mortgage News Network, with Brian Coester of CoesterVMS.
This is Mortgage News Network.